The following program is brought to you by Jack Miller.
It's Down to Business with Jack Miller. Forget what they teach you in school. This is real life, not Wall Street, but Main Street. A real show on what's really involved with starting and running a business with all the ups and downs. Our guests will answer your questions and provide you with valuable information. Stay tuned and join in the conversation.
When the earth was created, the word...
Everyone, thank you for joining us. This is Jack Miller. I'm so pleased to be with you today. I am bubbling with energy and enthusiasm today, and I just can't wait to get into the show today. We have a super exciting guest on it. Actually, a super great show, but it's going to start with, we're going to bring on, I'm lucky enough to have a guy by the name of Mark Roderick join us in a minute or two. He is Mr. Crowdfunding attorney. This guy is the preeminent attorney in the whole country who deals with the new craze of crowdfunding. Crowdfunding is really just the new way that people are raising money on the internet, but this guy's on the forefront of it, and I'm excited to have him with us. And with that, I want to bring him on right away. I don't want to waste any time. This is a great thing. Mark, are you with us?
I am with you, yeah. And when you started off by saying you were bubbling, I just was wondering what you were bubbling with. But I am relieved to hear that it was just enthusiasm.
Well, you know, the truth is, last night, I don't know if you heard, but there was a terrible, terrible plane crash in Ohio. And a bunch of, I think 7 people were killed on the plane. Whatever, a freak story. It turns out that one of them lived in my neighborhood. And I was so depressed. I don't know the guy, but the whole thing just depressed me. You know, he's a young guy, the prime of his life. I was literally sitting on the sofa just depressed over the whole thing. And then I realized that, you know what, you have to enjoy life. We have to be passionate about everything we do, because you never know when, we're here for a short time, and you never know when your time is up. And I'm just bubbling with energy, bubbling with enthusiasm. I got tons of questions for you, by the way, on Twitter. A lot of people have a lot of crowdfunding questions, and I'm thrilled you're with us. So I'm bubbling.
Well, thank you. Thank you. I am absolutely thrilled to be here. I tend to be a little bit evangelical about crowdfunding because it's just such a terrific and important development. So I am thrilled to join you. You and I have spoken before, and you are a super interesting, inquisitive guy, so I think we're going to have a great conversation.
So let's start out. Why don't you give everyone the history of crowdfunding and what it really is? Because people, I think, have a common misconception about it, like it's something new. People have been always raising money, probably since the pyramids or, forever. Putting capital together, whether it be debt or equity. And let's hear from you exactly what crowdfunding is and how it's really changed the whole landscape of business over the past several years.
Okay, well, I'd be happy to do that. Please interrupt me if I start to sound too boring. Yeah, we've had crowdfunding in one form or another forever, in the sense that crowdfunding just means a lot of people pooling money together. And, of course, people have been doing that forever. The Empire State Building back in 1885 was crowdfunded. A lot of things have been crowdfunded since. The difference today, what crowdfunding is today is really very simple, and that is crowdfunding is the Internet coming to the capital formation industry. So we may talk about a lot of complicated technical rules today, but if you just bear in mind that crowdfunding is really very simple, crowdfunding in its current sense, it's just the Internet. And when the Internet comes to industries, and we can all think of the industries it's come to, the travel industry and the dating industry and the taxi cab industry and the hotel industry, the Internet always does the same thing, and it directly connects buyers and sellers. So in a hotel, the seller is someone with an accommodation they want to rent, and the buyer is someone who needs some place to sleep. In the crowdfunding world, in the investment world, the sellers are people looking to raise money, and the buyers are investors. And the Internet, for the first time in history, directly connects buyers and sellers, that is companies and investors. Up until now, as any business that has ever tried to raise money knows, our capital formation industry in this company is this hugely expensive, inefficient series of private networks where it really matters whom you know, who your father knows, where you grew up, and now for the first time, because we can use the Internet to have this direct connection, all of that goes away. And for the first time, companies and investors can talk with one another. That's why it's such a huge deal. And just as those other industries have all been totally transformed by the Internet, the capital formation industry, the business of raising money, is similarly in the process of being totally transformed for the better.
So really what it does is it gives people who want to raise money, whether it be for debt or equity. So, correct?
That is correct.
So the ability to go out and instead of going through a stockbroker or friends and neighbors or whatever, it allows them to advertise it either on their own or through a portal, a crowdfunding site, and connect directly with investors.
That's correct, and that has never in history been legal. So just to take an example of the reason it's so exciting and so transformative, if you happen to be so lucky as to grow up in the San Francisco Bay Area, right, and you want to start a company, chances are within 1 or at most 2 degrees of separation, you probably know somebody who knows somebody in the venture capital industry. And so starting a company, raising capital is very easy. I live very near a city, Camden, New Jersey, which has the fame of usually being the homicide capital of the country. And I gave a presentation in Camden not too long ago and noted that kids, living 500 yards from where I was speaking, if they have an idea for a business, where the heck do they go? And the answer is nowhere up until now. But today, the kids in Camden with a business idea have access via the Internet to every single investor in the whole world, just like the kid from the San Francisco Bay Area. So it's just this transformative event.
Usually I rail on the government for over-regulating us, but this has partly come about, I believe, and correct me if I'm wrong, you're the expert, because of not only does the Internet come of age at the right time, but the government has actually loosened regulations or changed the regulations that permitted this, because there was all kinds of regulations a few years ago for advertising, for example, in the newspaper, and now you can do that. So is that correct, that the government's really changed and made certain exemptions for this possible?
Yes, absolutely. For the last 80 years, this was the thing. You couldn't advertise. And that rule just began to look and act and feel more and more archaic as we got into the Internet age, and the temptation to be able to advertise for investors over the Internet just became overwhelming. So what happened back in 2012, and this is actually a pretty interesting thing, the Jobs Act was signed into law by President Obama on April 5th, 2012. The Jobs Act is probably the most important piece of bipartisan legislation in the history of the Obama presidency. The Obama presidency has had other important legislation like the Affordable Care Act, like it or hate it, but that was hardly bipartisan. But the Jobs Act was passed with Republican and Democratic votes. Of course, the parties typically voting yes for different reasons. The Republicans in favor of deregulation and so forth, the Democrats voting in favor of community development, job creation. But this is, the crowdfunding laws are a creature of a historic change in laws that happened in 2012.
So I want to give the government some credit. And I want to further say that I'm a big believer that one of the things the government needs to do, and this is kind of a little political statement, I have to go on a tyrant here, is if they want to spark the economy, do what they did here, lessen regulations to make, instead of making it onerous for businesses and investors, make it easier for businesses and investors. So the government, I think, did a great job with this. I really do.
Yeah, and I'd take that a step further. So the law gave the Securities and Exchange Commission a lot of leeway to interpret exactly how it would be introduced from a practical point of view. And I am telling you that for all the bad things you sometimes hear about the SEC, at virtually every step of the way, the SEC has leaned over backwards to make crowdfunding easier, better, more flexible, less expensive. So the government agency in charge of this is clearly on board. They are really going out of their way. The regulations that you might have heard about, the final piece of crowdfunding, so-called Title III, that were just finally passed by the SEC a couple weeks ago. Again, the SEC is going out of its way to make things easier for entrepreneurs to raise money, and I don't think there's any doubt in the world that, this is going to have a huge job-creating impact over time.
So people can do, so let me break down some questions that I got and ask specific questions. I'm a guy in wherever, Ohio, Philadelphia, Florida, anywhere. I want to open up a business, and I'm making up a number, 200,000-300,000. Let's say I want to buy a fast food franchise, or I actually had a question about an Adam and Eve adult toy store. We happen to have them on as a speaker, I don't know, a couple months ago, and someone tweeted me the other day and said, hey, can I buy an Adam and Eve sex toy store and crowdfund the money that I need?
Well, the answer is absolutely. You can use that. Let's say that your person in Ohio wants to open that store and needs to raise $300,000. So that is a perfect so-called Title III crowdfunding kind of company, raising a relatively modest amount of money, able to raise the money from non-accredited investors, and probably, given the nature of the business, able to interest a lot of non-accredited investors in that business. And for that matter, to take it a step further, on Kickstarter, which is crowdfunding except it's just gifts. You're making gifts to companies. And on Kickstarter campaigns, the company usually gives you a gift in return, a T-shirt or a baseball cap. Well, you're going to see that in Title III as well, and, the franchise you're talking about could probably promise some pretty interesting gifts to its investors. So that would actually work really well.
Maybe worth it just for the gifts. And the same thing, I assume, can happen if I want to buy a duplex to rent out or to fix up for $100 or $200,000. If I'm just a regular investor and it's not the Empire State Building, it's just a small property, I can go on and do that. And am I correct in saying that we have to take a break in a minute. I want to get into portals when we get back, but I can do that on my own or through a portal, correct?
Well, this is how it works. That starts to get a little bit complicated because that depends on what flavor of crowdfunding you're using. There are three flavors, and I won't go into the detail now unless somebody asks me to, but one's called Title II, one's called Title III, one's called Title IV, and those are for the sections of the Jobs Act in which they appeared. Under Title II and Title IV, anybody without using a portal can just go ahead on the Internet, create an Internet site, and start selling securities. That is raising capital, no problem. Title III, which is the most recent addition to the family, does require using a portal. It's a more regulated flavor of crowdfunding, and there's a bunch of rules around it. And one of those rules is that you cannot just create your own website. You have to go through a portal which itself needs to be registered with the SEC.
So we have to take a break. When we get back, why don't we talk a little bit about portals and a couple more things? But before we go to break, why don't you give everyone your contact information? Because I know you're going to have a lot of people are interested in speaking to you.
Oh boy, okay. I'm happy to do that. My name is Mark Roderick, and I'll give you my telephone number. That's the easiest to write down. Is 856-661-2265, and I have a blog which I post to very regularly with all kinds of cool stuff about crowdfunding, and that is www.crowdfundattorney.com, except it's not quite the whole attorney. It's crowdfund and then ATTNY.com. And if you're interested in learning about crowdfunding, that is a terrific place to start.
And as a sidebar, Mark puts out a crowdfunding, what I call cheat sheet. In fact, I just tweeted it if anyone wants to look. And you may have updated it. Mine's maybe 6 or 9 months old. I would send Mark an email and get that cheat sheet if you have any interest in it. With that, we have to take a 2-3 minute commercial break, Mark. Stick with us, a bunch more questions for you.
Don't turn that dial. We will be right back.
Are you tired of dealing with unreliable banks and brokers who charge upfront fees and never deliver on their promises? You don't have to. Gelt Financial Corporation has been in business since 1989 and offers a stated income loan program for non-owner-occupied residential and commercial real estate investors. No tax returns required. What are you waiting for? Call Gelt Financial right now at 561-221-0900. Again, that's 561-221-0900. 561-221-0900.
Did you invest in a non-liquid real estate partnership? Do you want and need liquidity? There's finally an answer. Quick Liquidity is a direct buyer of real estate minority interest and tenants in common investments across the country. To find out if we would buy your non-liquid investment, call us at 561-221-0881 or visit us at quickliquidity.com. That's quickliquidity.com. If you're buying, selling, or investing in real estate, call attorney Dan Kaskow, 561-237-6822. Mr. Kaskow is board certified by the Florida Bar as an expert in real estate law. He's been practicing law for more than 20 years and is a partner in the law firm of Sachs Kaplan with offices in Boca Raton and Tallahassee. Dan Kaskow handles real estate, corporate, condominium, and homeowner association matters throughout Florida. From residential purchases and sales, bulk buying and selling of condominium units, to purchases and sales of commercial properties. Contact attorney Dan Kaskow at 561-237-6822 for your real estate, corporate, and community association legal needs. Attorney Dan Kaskow, 561-237-6822. Not an attorney spokesperson for attorney Dan Kaskow.
You landed on 880 The Biz, South Florida's only business talk station. 880 The Biz, where money talks. Welcome back to It's Down to Business with Jack Miller. Call us at 305-541-2350. Follow us on Facebook at Jack Miller Down to Business or on Twitter at HJackMiller1.
Hello, everyone. This is Jack Miller again, and I'm so lucky and pleased to be here with Mark Roderick. Mark is one of the leading crowdfunding and really securities attorneys in the country. He's with Flassler Greenberg. And Mark, thanks for sticking with us during the break. Mark, it seems that people can go on the internet and buy these, but directly. But it also seems what's called, I think it's a portal, which I describe as like a marketplace for different crowdfunding deals. That's sort of like a new business for it. Why don't you describe what a portal is?
Sure. I will tell you exactly what a portal is like, and I actually use this terminology frequently. A portal is a store. It's a store that happens to sell securities, meaning, for example, an interest in a real estate fund or an interest in a high-tech company. So the product is securities, but it's really very helpful to think of the portal as just a store. So DSW is a store that sells shoes. A portal is a store that sells securities. And, in fact, the way the market has developed, it's developing, I should say, just like the retail market. So if you're in the market for shoes, you don't want to have to go in a whole bunch of general merchandise stores. You want to be able to go to DSW. I sound as if I'm advertising for DSW, but I'm not intending to. And in the same way, the way the portal market is developing, there are portals, for example, that sell only real estate debt. Okay? So if you're in the market for real estate debt, you want to go to that store. There are portals that sell only interest in consumer product companies. So again, if you're an investor and you're really into the consumer product space, you go to that portal. So just as the retail market has developed, you get a lot of specialty stores, then there are also a few sort of more general merchandise stores. So that's what portals are, and I just want to tell everyone that because the crowdfunding market is so new, it's like, the U.S. West in the 1840s where they sort of let people go out and claim some land and a few little stores got developed. That's the way the crowdfunding market looks today. There are a handful of well-known stores. There are a bunch of less well-known stores, but we're a long way from the mall, that we're all familiar with. Probably in 10 years there's going to be malls, portals where you walk in and you can just find any kind of company. But today it's just these sort of individual stores.
And it breaks down even further because if I want to invest, for example, in a real estate, whether it be debt or equity, I can have my choice whether I want a short-term deal, 6 months to 2 years, or a long-term hold. So I know because I registered for a bunch of the portals, and some of them, are short-term buy and flip deals you can invest in, and some of them are, apartment buildings that they may be owned for 10 or 15 years type deals.
Yeah, no, that's absolutely correct, and a fun parlor game you can play is sort of trying to predict how the portal industry is going to develop. Are they going to develop into these sort of mega malls, or are they going to develop into very, isolated product brand names? So it's sort of fun to speculate. But so far it's developing as you might have predicted, where it's becoming more specialized so that if I'm an investor and I decide I want an investment of a particular type, I know just where to go.
So really, the crowdfunding has taken away a lot of the barriers to entry in terms of regulation and price that they were facing before. But I still want to play up, or I want to let people know that I believe, and I think, Mark, you're definitely going to agree, that people still need qualified attorneys to guide them with this, because it's not like the Wild West where they can put up any offer. You still need, I would assume, a private placement memorandum with the proper disclosures and all of that good stuff.
Yes, you absolutely do. I mean, it's a pretty unregulated market. It is a little bit, particularly in Title II crowdfunding, it's sort of wild, wild west. So you definitely, want to get good advice if you're a company and you're trying to raise money, because the last thing you want is to go through raising money and then find yourself on the wrong side of a lawsuit. And, if you're an investor, you certainly want to get investment advice. Most of us, just frankly don't have the ability to decide on, private investments where should I invest in this office building in Ohio or an apartment building in Austin, Texas. That would be a real tough one for me for sure. So investors also want to understand that these are private investments. They are relative to, buying something like General Electric in the public stock market. They are relatively risky deals. There's no such thing as a free lunch. But I do want to say, and I know Jack, you and I have talked about this. So people think about crowdfunding as a great boon for entrepreneurs because now they can raise capital so much more easily and reach so many investors. All that is absolutely true. But it wouldn't matter if it were not also a great deal for investors, because the way the investment market is structured today, if you're just an ordinary investor, your choice of investments is very, very limited. The great investments, the ground floor investments, for example, in a big, great real estate project, those investments up until today have been reserved for the very wealthy. Today, you can go on a crowdfunding site as an ordinary investor and buy an interest in the World Trade Center. That is a first time in history, and that's an example of investors as well as entrepreneurs having this fantastic opportunity that they've never had before.
So it's really opened up tremendous opportunities for investors.
Absolutely.
It comes with risk, and there's a lot of risks out there, and maybe I'm going to talk about it the second part of the show, and maybe we'll have you back and talk about it. So I would just encourage investors to tread lightly. Just don't write checks, because my feeling is, as I look at these crowdfunded deals, and I don't mean to be the naysayer here, because I'm strongly in favor of it, I think a lot of these deals are going to blow up in a couple years, or some of them may blow up. And my fear is when they blow up, the regulators will do a pendulum swing the other way and tighten up the regulations. So investors, I believe, should be very careful which deals they invest in.
Yeah, and no doubt about that. And I mean, the best advice I would give is, try to give is, one, get investment advice, and two, the same way you're careful about what retail stores you shop in. You sort of get comfortable with the quality of a Macy's, or if you want to shop at another store, you're sort of familiar with its quality. I would today invest in crowdfunding deals only from reputable portals, only at reputable stores. You still don't know they're going to be successful, because if you invest in a real estate deal and the real estate market tanks the way it did in 2008, you're probably going to lose money. But
so be careful. That's the bottom line. Be careful.
Yeah,
Mark,
exactly.
We only have 2 minutes left. I want you to give out your contact information, but are there any other big things that I did not touch on, which I should have, that you want to bring up?
Well, the only thing I would say, I don't know how much your listeners care, but that there are these different kinds of crowdfunding. Some crowdfunding is reserved for accredited investors only. Some kinds of crowdfunding non-accredited investors can participate in. Some kind of crowdfunding you have to go through a long review process with the SEC. So it's not a one-size-fits-all market, and you do sort of have to get some advice and carefully decide which avenue you want to go down.
I would suggest anyone follow you on Twitter, get your blog, get your cheat sheet. Mark, give out your information before we go, because I know what a valuable resource you are, and people really need to touch base with you, whether they're thinking about starting a portal, thinking about starting as an investor, or as a sponsor.
Well, thank you, Jack. Okay, again, it's Mark Roderick. Phone number, which is easy to write down, is 856-661-2265, and crowdfunding blog is crowdfundattny.com. So I'm really happy to have joined you, Jack.
Mark,
it's
thank
been
you.
Fun.
You're the man. I really appreciate it. I know you're super busy. I don't know what to say except thank you. My audience loved it, and they're going to check you out on Twitter and all the other stuff. Mark, thank you very much. Our audience, stick with us. We'll be back after the break. Mark, thanks again, buddy.